Hawaii hotels revenue up substantially in June 2021. It's a positive sign to see Hawaii hotel accommodations statewide reporting an upward rise, knowing how many local workers and families are benefiting from the return of the domestic market. Hawaii hotel room revenues statewide rose to $387.7 million in June. Maui County hotels led the counties in June. Through the first half of 2021, Hawaii hotel performance statewide continued to be impacted by the COVID-19 pandemic. Hawaii hotels statewide reported substantially higher revenue per available room, RevPAR, average daily rate, ADR, and occupancy in June 2021 compared to June 2020, during which the state's quarantine order for travelers due to the COVID-19 pandemic resulted in dramatic declines for the hotel industry. When compared to June 2019, statewide RevPAR and ADR were higher in June 2021, but occupancy was lower. According to the Hawaii Hotel Performance Report published by the Hawaii Tourism Authority (HTA), statewide RevPAR in June 2021 was $247, plus 769.5%, with ADR at $320, plus 127.0%, and occupancy of 77.0%, plus 56.9 percentage points. Compared to June 2019, RevPAR was 4.8% higher than 2019 levels, driven by higher ADR, plus 14.2%, which offset lower occupancy, minus 6.9 percentage points. It's a positive sign to see hotel accommodations statewide reporting an upward rise, knowing how many local workers and families are benefiting from the return of the domestic market, said John DeFries, HTA President and CEO. During the first 6 months, although the hotel RevPAR and occupancy were still nowhere near the pre-pandemic levels of 2019, it's encouraging to see the steady comeback of jobs and opportunities for Kama'aina that weren't there a year ago. The report's findings utilized data compiled by Street, Inc., which conducts the largest and most comprehensive survey of hotel properties in the Hawaiian Islands. For June, the survey included 138 properties representing 44,614 rooms, or 82.6% of all lodging properties and 85.2% of operating lodging properties with 20 rooms or more in the Hawaiian Islands, including full-service, limited-service, and condominium hotels. Vacation rental and timeshare properties were not included in this survey. During June 2021, most passengers arriving from out of state and traveling inter-county could bypass the state's mandatory 10-day self-quarantine with a valid negative COVID-19 NART test result from a trusted testing partner prior to their departure to Hawaii through the Safe Travels program. In addition, individuals who were fully vaccinated in Hawaii could bypass the quarantine order beginning June 15. Inter-county travel restrictions were lifted also on June 15. Hawaii hotel room revenues statewide rose to $387.7 million, plus 1,607.1% versus 2020, plus 1.5% versus 2019, in June. Room demand was 1.2 million room nights, plus 652.0% versus 2020, minus 11.1% versus 2019, and room supply was 1.6 million room nights, plus 96.3% versus 2020, minus 3.2% versus 2019. Many properties closed or reduced operations starting in April 2020. Due to these supply reductions, comparative data for certain markets and prices classes were not available for 2020. Comparisons to 2019 have been added. Luxury class properties earned RevPAR of $530, plus 19.5% versus 2019, with ADR at $754, plus 36.2% versus 2019, and occupancy of 70.2%, minus 9.8 percentage points versus 2019 to the power of 2. Mid-scale and economy class properties earned RevPAR of $122, plus 166.7% versus 2020, minus 11.7% versus 2019, with ADR at $163, plus 52.9% versus 2020, minus 3.8% versus 2019, and occupancy of 75.2%, plus 32.1 percentage points versus 2020, minus 6.7 percentage points versus 2019. Maui County hotels led the counties in June and achieved RevPAR that surpassed June 2019.
RevPAR was $394,
plus 1,523.8% versus 2020, plus 24.1% versus 2019, with ADR at $498, plus 260.4% versus 2020, plus 26.3% versus 2019, and occupancy of 79.2%, plus 61.6 percentage points versus 2020, minus 1.4 percentage points versus 2019. Maui's luxury resort region of Wailea had RevPAR of $595, plus 5.9% versus 2019 to the power of 2, with ADR at $790, plus 28.0% versus 2019, and occupancy of 75.3%, minus 15.7 percentage points versus 2019. The Lahaina, Kaanapali, Kapalua region had RevPAR of $357, plus 5,498.9% versus 2020, plus 32.3% versus 2019, ADR at $437, plus 408.2% versus 2020, plus 31.6% versus 2019, and occupancy of 81.7%, plus 74.3 percentage points versus 2020, plus 0.4 percentage points versus 2019. Hotels on the island of Hawaii reported strong RevPAR growth at $281, plus 655.9% versus 2020, plus 43.9% versus 2019, with ADR at $356, plus 208.4% versus 2020, plus 42.8% versus 2019, and occupancy of 79.0%, plus 46.8 percentage points versus 2020, plus 0.6 percentage points versus 2019. Kohala Coast Hotels earned RevPAR of $452, plus 62.1% versus 2019, with ADR at $557, plus 58.4% versus 2019, and occupancy of 81.2%, plus 1.9 percentage points versus 2019. Kauai Hotels earned RevPAR of $266, plus 759.1% versus 2020, plus 27.7% versus 2019, with ADR at $339, plus 135.0% versus 2020, plus 21.0% versus 2019, and occupancy of 78.4%, plus 57.0 percentage points versus 2020, plus 4.1 percentage points versus 2019. Oahu Hotels reported RevPAR of $171, plus 516.5% versus 2020, minus 19.8% versus 2019. In June, ADR at $227, plus 49.9% versus 2020, minus 6.5% versus 2019, and occupancy of 75.4%, plus 57.1 percentage points versus 2020, minus 12.5 percentage points versus 2019. Waikiki Hotels earned $166, plus 661.9% versus 2020, minus 20.6% versus 2019, in RevPAR with ADR at $218, plus 46.6% versus 2020, minus 8.1% versus 2019, and occupancy of 76.2%, plus 61.5 percentage points versus 2020, minus 12.0 percentage points versus 2019. First half 2021. Through the first half of 2021, Hawaii hotel performance statewide continued to be impacted by the COVID-19 pandemic. Hawaii hotels earned $141 in RevPAR, minus 4.7% versus 2020, minus 37.3% versus 2019, with ADR at $293, plus 1.6% versus 2020, plus 4.8% versus 2019, and occupancy at 48.1%, minus 3.2 percentage points versus 2020, minus 32.3 percentage points versus 2019. Total statewide hotel revenues for the first half of 2021 were $1.3 billion, plus 18.5% versus 2020, minus 41.0% versus 2019.
Room supply was 9.2 million room nights, plus 24.3% versus 2020,
minus 5.9% versus 2019, and room demand was 4.4 million room nights, plus 16.6% versus 2020, minus 43.7% versus 2019. Comparison to top U.S. markets. In comparison to the top U.S. markets during the first half of 2021, the Hawaiian Islands earned the second highest RevPAR. Miami, Florida led the nation in RevPAR at $155, plus 24.2%. Tampa, Florida ranked third at $100, plus 42.1%. The Hawaiian Islands led the U.S. markets in ADR for the first half of 2021 at $293, followed by Miami, Florida at $227, minus 1.5%, and New York at $154, minus 5.2%. With the U.S. mainland accessible for road trips and short-haul intercontinental flights, the Hawaiian Islands occupancy for the first 6 months of 2021 was lower than many destinations in STR's top 25 markets, landing at the 17th spot. Tampa, Florida topped the country in occupancy at 70.4%, plus 17.0 percentage points, followed by Miami, Florida at 68.5%, plus 14.2 percentage points, and Phoenix, Arizona at 61.7%, plus 8.1 percentage points. Comparison to international markets. When compared to international, sun and sea, destinations for the first half of 2021, Maui County ranked second in RevPAR at $247. Hotels in the Maldives ranked highest in RevPAR at $391, plus 31.2%. The island of Hawaii, Kauai, and Oahu ranked 5th, 8th, and 10th, respectively. Through the first half of 2021, the Maldives led in ADR at $794, plus 8.1%, followed by French Polynesia, $6,342, and Maui County, $475, plus 10.2%. The island of Hawaii, Kauai, and Oahu ranked 5th, 7th, and 10th, respectively. Puerto Rico led in occupancy for sun and sea destinations during the first half of 2021 at 60.9%, plus 23.4 percentage points, followed by Maui, 52.0%, and the Cancun region, 51.6%, plus 14.5 percentage points. The island of Hawaii, Oahu, and Kauai ranked 4th, 7th, and 8th, respectively.